It's about that time of day again here. Welcome to your nightly newsletter, boys and girls. My name is Joseph James. It's Tuesday evening, February 17th, 2015. In tonight's newsletter, we got crude oil looking mighty bullish, but I'm looking to get short overnight and early tomorrow because we have a megaphone on crude oil. Yeah, in addition to rollover tomorrow. Talk more about that in a moment. How about gold? Gold is bearish. It's been bearish for weeks. Had a great week last week selling short on gold, but we're well oversold, and there are some very big clues on gold that you need to be aware of before you go to sell short again tomorrow. It looks like we're going to get a bigger correction than we may be initially expecting. So we're bearish on gold, looking to sell short, but hold on tight though. I want to show you why I'm not as bearish as I could be. And then of course the mighty Russell is very, very bullish, but it's trading inside of a range. Overbought, up near its highs, so we're going to use that range on the Russell to look for range breakouts. As you can see, we get a jam-packed newsletter in store for you guys. I hope you made a lot of money with us last week on the newsletter. Hope you had a great holiday weekend. We are back here for a February 17th, Tuesday edition of our newsletter. Feels great to be back. Before we jump into our charts, though, today, I do want to remind you, make sure you're watching this video over here in our trading blog at sidewaysmarkets.com. 3 reasons why you should follow the link below the video if you're watching this on our YouTube page. First of all, you can download all of my charts right below the video tonight. You can grab a free pass to come out and attend my live trade room as a guest, and you can register for our nightly newsletter mailing list. Once again, you can download all of the charts I'm going to use this evening, have them ready on your computer for tomorrow. That way you've got them ready to go, and you can follow that link right below the video. Upper left-hand corner, I've got a special free pass for anybody out there that might be curious what it feels like to be a student here at School of Trade. If you're not a member of our live trade room, as it is right now, I would love to give you a free pass. Come out and join me anytime that's convenient. And then how about you never have to worry about missing another newsletter again? Give me your name and your email address, and I'll register you for that nightly newsletter mailing list. Now, guys, if you register for the mailing list or if you grab your free pass, just be aware I'm going to send you a verification email to make sure that you're not a robot, make sure I have approval to keep sending you emails, and, of course, make sure we have the right email address. So make sure you check your email once you register. All righty? I think we're ready to rock and roll here. Boy, I'm still trying to kick off all the Valentine's Day candy coma I've been in half this day today. Hope you all had a great President's Day, Valentine's Day. We all know it was Valentine's Day. That was the real holiday of the weekend. Not that we haven't had some incredible presidents to celebrate here. Anyways, back here we go. Let's start with the Russell. Russell is bullish, trading inside of a trading range this evening. Look at the volume at the bottom here. Volume does confirm. Nice big strong volume there, and just a little teeny double top up there. Now, swap this around. If we had a higher high in price but a double top in volume, this would be the opposite of what we're talking about right now. But the reality is the volume going higher as we are pushing higher, even though it is an official double top. That definitely tells me these buyers are here. These buyers are all percolating here, and they're definitely looking to play some ball right now. The big thing that I see right now in this Russell is you've got this trading range. This trading range is going to be public enemy number 1. Whatever you do, do not buy the highs of this range. So when I look at this trading range, I look at the volume analysis. If you're a member of mine, you're probably saying, breakout, baby, breakout. So what are our options? Option number 1 is going to be a breakout trap, buying the low. Option number 2, breakout fade, buying support. Option number 3 would be a breakout pullback on the way up. So we have 3 different options right now, if you want my opinion. Option number 1, and again, all of this will revolve around buying. Option number 1 is going to be a trap. Basically, you buy the low. Option number 2 is going to be a fade. Okay, kind of like buying the low, but you're buying that support area down below the low. And then, of course, third, breakout pullback. The one thing you'll want to remember, if you trade that breakout pullback, make sure you're entering long above that 1225.4, and then I've got targets and targets waiting for you. It's very easy to see we have a measured move target. So that 1231.7, that should be a walk in the park. Whatever you do, though, don't buy these highs, right? If they want to rattle around in here, don't buy those highs. Wait for it to break out, pull back, and then go. The best trade here will be either a trap or a fade at these lows, because that will get you in at a lower price. And of course, as a bull, we make better money when we buy at those lows. So look to buy the low of the channel, look to buy the low of the range, look to buy the support levels below us, and if we do push higher, look to buy on a pullback. Moving forward here, the price action on the Russell. You're going to see a lot of the same stuff here, but there's one very, very big clue here. Price action on the Russell is bullish. We've got that trading range, so we're definitely seeing not the exact same stuff. You can see these are two very different charts. They just happen to be giving us pretty much the same stuff here tonight. So we're buying at support levels if we get the retracement, and we're going to buy in a pullback if it pushes higher. So if it pushes higher, again, buying that pullback. I've got 25.8, right? On the other chart, it was 25.4, right? So you get a couple different options there as far as the exact spot. 25.8 sounds pretty good to me. If we go higher here, you get a measured move target as well as a range expansion target. Now let me paint this picture for you here. This is a really easy trick that I like to use with these ranges. Notice how the moving average, right? See this little yellow line in the chart, right? You probably don't hear me talking about this very much. I really don't use it very much except to alert me to when it flattens out. When it flattens out, then we know we have a trading range, right? For example, right here, you can see flattens out, breakout, pullback, right? That was from last week. Here we are now, flattening out. Watch how this works. Take that trading range, copy it, paste it, copy it, paste it. Now you can see why I'm looking for a great buying opportunity down at 1214. So again, bullish trend. I know what direction I'm looking at. The big thing right now is where. Where am I going to look to get in long here? Again, option number one, we go higher, breakout, pullback. Option number two would be to buy the low with a trap. And then option number three, which would be the best option here, is to buy it on a fade, right? Buy it on a fade. And then this is also, again, just take that, copy and paste it. Take that, copy and paste. You can kind of see where I get my target from. You can see where I get my buy zone from, right? Now, who knows what we're going to get here, but obviously, if this thing takes off the downside, stay patient. You can definitely sell this thing short on a breakout retrace. Just be aware you're going counter trend. You mess with that bull, you're going to get the horns more often than not. So what I'll be doing is I'll be waiting patiently here. And then once we start going higher, pull back, pull back, pull back as we start going higher here. Okay, so we're bullish in the Russell, but we're range bound. You got to be thinking range breakouts. And you can actually learn all about range breakouts in my free trial here at School of Trade as well. So don't even have to be a member. How cool is that? All right, we are moving here on gold. Boy, what a great last few months we've had on this gold. It's been relatively easy. We were inside of a channel for a long time, wedge for a long time. We keep using that 1200, big round number. What's up with gold? Gold is bearish, but it is well oversold. The reason why I say it's bearish, you can see lower lows, lower lows, lower highs, lower highs. You really got to be blind here not to see that's a bearish trend, right? Sloped moving average, very, very easy to see. Why do I say it's oversold? Because A to B, C to D, you can see we're pretty much at that A, B, C, D measured move right now. So we're definitely going to get some bargain hunters. We're definitely going to get some profit takers. We're definitely going to get some harmonic traders, I guess you would say. I guess everybody thinks A, B, C, Ds are harmonics these days. But the reality is we get a measured move. So we know this is oversold. Here's a really big clue, though. Look at the bottom of the chart. Now, remember, I don't use volume very often. When do I use volume? I use volume to confirm if a recent higher high or a lower low, or in the past couple charts here, double tops, double bottoms, I use volume to confirm what was happening at that time. And look at what happened here. Here we have volume that does not confirm. You'll notice we try to go lower and literally these sellers apparently just walked away. And then if you really want to get a little bit interesting, look what happened when the price are moving higher. Volume spikes up. We literally get, now see, this is a good clue. Not, it's not guaranteed anything, but look, the highest point of volume the whole stinking day was when price started rising. Right? So that doesn't confirm that we're going lower, at least not at this time. So what are we thinking is going to happen? Well, I would expect here double bottom, volume doesn't confirm, volume does confirm once it goes higher. I know, right? That'll blow your hair back. I'm looking at price going up before it comes back down. So definitely expect to see some profit taking. I would assume that's where the volume's coming from as price goes lower. I don't think people are buying this. I just think they're getting the heck out of those shorts and maybe into some nice sweatpants, of course. That was a bad trading joke. Anyways, looking for a push higher. Now again, could I buy this? Could I be a buyer here? Joe, you just said volume confirmed. Well, like I said before on the Russell, if you want to go counter trend, just be prepared. Risk a little bit less. Don't let it go against you so much, right? If you're wrong, get out of that trade, and then when you can, take some profit and tighten up that stop. Because at any moment, if you try to be a buyer right now, remember, at any moment, it could come collapsing back down. So I always believe in trading with the trend. If you want to trade counter trend, go small position size, smaller amount of risk, and make sure it's a perfect pattern. To be very honest with you guys, and we talk about this every day in our trade room, professional traders make the majority of their money from unsuspecting victims that are trying to go counter trend. Right? That's what happens. That's the easiest way to make money as a professional, is to anticipate where would the too eager buyers here be coming in and where might they start to fail, right? Think about that for a second. So we're bearish on gold, but not as bearish as I'd like to be right now. Let's keep going. Over to the price action chart here on gold. Gold price action, again, not a lot different on this chart, but a lot of really good clues on this. So gold price action is bearish, but I want you to take a quick look. See, this is where we get a lot more information from these tick charts, right? This is a 1400 tick chart, much different type of chart than those JJ bar charts, which are great for patterns, but they don't give us a lot of the details that are inside of each candlestick, right? It's a give and a take. Sometimes we use tick charts, sometimes we use JJ bar charts, right? Range-based charts. You can go join our trial to find out why we use certain charts in certain situations. So we know we're bearish, but I want to hone in on this undershoot and double bottom, because this tells us that the sellers are likely finished now, but stay alert for selling opportunities at levels overhead. This is a real cool little trick here. So here we have, again, we saw the double bottom before, but what we weren't able to pick up on before was we had this kind of lack of follow through. We call this an undershoot, okay? An overshoot, which we've seen before, creates a correction much larger. Well, an undershoot usually is going to put us about the same amount back above, right? So here we have resistance overhead, and that's why I have this marked as the overcorrection resistance, right? So we aren't quite playing ball with the lows of this channel. That tells me sellers are weak. We saw proof of that on the last chart. How weak are they? Well, I'm glad you asked. I would expect price to at least go through this channel here before coming back down. What's going to happen is we need to get more sellers involved, and apparently those sellers did not see value in prices that were this low. Right? Think about it, right? The auction process, what's going to happen is they basically rejected lower prices here at the end of the session today. We go up, 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 up. Once we start seeing attractive selling prices, right? Imagine if you had a pocket full of gold coins right now. You may have purchased those gold coins at 12.04, and so you're not going to sell them until you get around 12.14, right? Everyone's got a different reason for it, but price, it appears, will have to go higher here before it goes lower, right? We saw volume confirming that on the last chart on gold, and again, this double bottom with that undershoot of those lows tells me the sellers just walked away from it. And we're going to have to attract those sellers to get back into this market. And if you understand auction process, then you know we're going to wait here, price is going to go up, and then eventually you'll start seeing people start take interest up at these highs, right? And we can sell it back down. Just a heads up, get some very obvious trading ranges. In fact, I really should have marked this one up too. Here's another range I would definitely be watching here. And guys, these ranges make for excellent price targets. They make for excellent magnets, right? So let's say that we didn't tumble here at this overcorrection resistance, right? So first sell here would be back down to this trading range, second sell from that trading range, and then third sell, of course, would be all the way back inside. So use these trading ranges, use the overcorrection resistance, and then use that trading range down around 1207 to 1204. Use that for your target, okay, on the way back down. Guys, if we do end up pushing lower here on gold tomorrow, come out and see me tomorrow morning in our trade room, and I'll walk you right through what I'm seeing here in real time. Looking at crude here, boy, what a remarkable session on crude today. Wrapping up with the black gold, the Texas tea, the crude oil futures. Just want to give you a heads up. I was a little bit on the fence here this evening about which contract month to give you guys. What I've done in the past is I've rolled over the night before, but sometimes it doesn't roll over the following day. The bottom line is this. If you look at the chart here, you'll see that we are scheduled, courtesy of our little rollover indicator. We're scheduled for rollover tomorrow. It's difficult for us to tell when exactly we're going to roll over because what do we use? We use the volume, right? So wait for the volume to confirm the move from the 315 to the 415. My gut tells me it's not going to happen tomorrow just because tomorrow's inventory day. So you'll probably see rollover. Well, rollover will be at 8 o'clock tomorrow morning or it'll be at the end of the day tomorrow. So we won't know that until we get to our desk tomorrow morning. We should have about the same structure, right? So if you come in tomorrow and again, check the volume. If the volume is higher on the 415, trade the 415 tomorrow morning. Check it around 8 o'clock in the morning tomorrow, and you'll see exactly what I'm talking about. But by 8 o'clock tomorrow morning, if the volume is not greater on the 415 contract than the 315 contract, you stay right with that 315 contract and then plan the rollover at the end of the day tomorrow. Okay, so just be aware of that. Rollover is it's teetering here right now. I checked volume. Volume is pretty much neck and neck right now as we go into tomorrow's session. I would expect, crude oil being the lovely mark that it is, I would expect they're going to make us share volume tomorrow on inventory day. Okay, tomorrow's also a Wednesday for inventory. And I will double check and see if that inventory report is still there. It's probably pushed back till Thursday, actually, now that I think about it. Okay, so plan on that inventory report being on Thursday tomorrow, and that will probably be, Thursday tomorrow. No, Joe. It's only Tuesday tonight. Tomorrow's Wednesday. So tomorrow being Wednesday, look for rollover tomorrow. Double check that inventory report. My gut would tell me we roll over on Thursday, and we have our inventories on Thursday. Okay, now that I got those shenanigans out of the way here. Now, what's happened with crude? Well, we get a megaphone alert. A megaphone. I talked about this earlier this year and said we never get these. And in the past, 3 weeks, we've seen 3, 4, 5 of them. You know the volatility is extreme when you're seeing megaphones at the rate at which we're seeing them right now. I mean, literally this morning, we went from basically 53.5 down to 51, right? So about 2.5 down, and then 3 back up. I mean, this thing was just remarkable. It just fell out of bed, and you really had to chase after it to get your hands on it. We called the reversal to the tick, and then it was, hopefully you guys took my advice on this in the trade room. I wasn't with you guys in the afternoon, but we knew that at that point, if it kept on going past the small retracement, it was going to be a bull run right back to those highs, and I'm sure you guys are going to make some money on that. Gave you guys the guidance on that today in our trade room. So what are we going to do with this thing? Well, first of all, we know we're bullish. Right? We definitely know we're bullish. It's very difficult to say we're not bullish in the long run right now. But there's a lot of clues right now that tell me that price will most likely push lower before going higher. Here's a couple of those clues. First of all, the megaphone. The megaphone, in my opinion, is the biggest clue. you can see that megaphone. And what happens is this is not the first time we've tested that we created that high, right? That megaphone was already there. So this will likely gravitate possibly all the way back down to the megaphone. Remember, a megaphone pattern is and again, I promise you, it's really rare. We never see them, but over the past 3 weeks, it seems like Crude's giving it to us the whole time. So what happens in a megaphone is, and the reason why it's a megaphone is because the way it looks, is that we'll expect the price to go all the way back down to its lows. Okay, that's the idea behind a megaphone. So here we are up top, 50% of the megaphone, that makes for a great target, and then of course all the way back down, right? These are relatively easy things to kind of theorize. Boy, guys, stick with me in my day trading. Luckily, I'm not an English teacher. All right, so we have theorizing going on here that this price is going to collapse based on that megaphone. Here's a little clue. Here's a really interesting little guy here. Look at this channel we have here. Draw the channel up. You can easily see the channel, right, off the lows. If I was to go back in time here, you'll see, yeah, it comes off the highs there. So we have the highs, we get the highs. So we get a bull channel, right? Bottom line, bull channel. Now look at the midline though. You draw that midline right in and look where we are right now. We're right on the midline right now. Okay, now midlines are important when they hold. And you can see this midline has been acting as support resistance, right? It's been acting like this quite a bit. So we already know this midline is there. And then look, as I zoom in on this, let me see if I can zoom in a little bit closer here. You can see it's just kind of hanging out at that midline right now. What that tells me is buyers are going to try to take this bait. And remember what I said earlier? The easiest way to make money is when other traders, uneducated traders, are losing money, right? The reason why it's easy, the reason why professional traders look to make money the easiest way when other inexperienced traders are losing money is because when you're taking a stop out, you're literally rushing out of that trade. There are 2 reasons why making money is easier when other traders are getting bounced out of their positions. One is the fear factor. Nobody thinks about getting out. Just get me out. The second you might not think about though, what type of order is being executed when you get stopped out? The term stop loss, it's a stop order. What's a stop order? An MIT, market if touched. What do we know about a market order? A market order is a market order is the only order type that guarantees slippage. If you use a market order, you're going to have slippage. Why? Because if you're trying to buy at the market, then you're going to get filled at the ask, the highest price up. If you try to sell at the market, you're going to get filled the bid, the lowest price, right? So what happens is you get instant slippage. That slippage, when traders are trying to buy this pullback right now, think about it. We go higher. Everyone and their sister-in-law is saying, got to buy right here, right? Buy the moving average, buy the midline. But what's going to happen when this thing goes lower? When it goes lower, everyone's going to go, ooh, shoot, I knew better than that. JJ always tells me not to buy those highs because you can see there's a range here, right here. And so what I would expect to have happen is they go up, they get a little bit out of it, just enough to smell the leather on the new Porsche 911, and I'm going to take their money if it comes collapsing back down, right? That's the idea behind it. So if you get stopped out, what's going to happen? Anyone who's getting in short is going to instantly make money on the slippage that occurs because of your sell stop. All right, guys, that's why getting into trades when other unsuspecting victims are getting forced out of trades is because they're going to rush out of that position, and the type of exit order they use, a market order, pretty much guarantees you get the slippage in your account and it leaves the other trader's account. Okay, so we got the megaphone, we got the midline, and then the third reason why I expect price to go lower, actually, I'm sorry, there's 4 reasons here. The third reason is because of this trading range. This trading range is a pretty big deal. Okay, you can easily see the range is there. We push lower, bounce up. For whatever reason, right, we come down to 51, big round number most likely. Don't read too much into that, but this range is definitely going to be in play. So what I would expect to have happen is when we break out of a trading range and then slip back in, we're going to easily cover the entire range. Okay, so remember, that's why, look at this. It's a stinking straight line right back up, right? So what happened was it goes out of the range and then whoop, right back up in. It's called price exploration. It's another example of auction market theory, which we teach here at School of Trade in our beginner's course. Okay, don't confuse with market profile. Okay, market profile is a gimmick. Auction market is a valuable theory for organizing price data. Okay, we teach you guys all about it in the beginner's class here at School of Trade. Okay, very important theory to understand. Fourth reason why I expect price to go lower before it goes higher. Volume, baby, volume. We got volume going lower. Line up these highs, higher high in price, lower highs in volume. That ain't that bullish. That ain't that bullish. If it was bullish, that volume would have been going higher. So it looks to me like maybe we were on a little candy sugar rush here today on crude oil. We're definitely bullish, but I'm thinking short in the short term because of those four reasons that I just mentioned. Shall we keep going? One more on crude? Yeah, I think we need it. This chart right here, this is what gives me some confidence here to call the short right now on crude. Now, we're probably going to see this thing try to go higher before it goes lower, right? We talked about that a moment ago. But what I'm seeing on this price action chart looks very similar to the JJ bar chart, that 16 anchor chart that I showed you before, but this one's got tick charts, right? This has tick candles, and tick candles are very, very important to how we trade because the JJ bars, those make it easy to find patterns. But hidden inside those candlesticks are a lot of clues, and that's why we use these tick charts. These tick charts show me open, high, low, close, green, red, big wicks, small bodies, big wicks. Who are you calling a big wick? Anyways, so crude oil price action on this chart looks a lot more bearish than it looked in the last chart. Here's why. Today we had the channel going lower. Sellers had their way. Again, we called this ABCD to the tick. Awesome reversal. Went into lunchtime. Consolidating, and my exact words for our group here at School of Trade was, if we keep going higher, you know where we're going. We're going right back to where we came from. So it was easy money going all the way back up. But look what happens. They couldn't hold it. They couldn't hold it. They just walked away. And we saw that from the volume, right? We measured the volume on that last chart. We saw the volume did not confirm. And then here's how we know. Okay, here's how we know. Look what happened at the moving average. Really? I mean, come on, guys. Even the kid at the local gym who's trading on his cell phone, even he's gonna buy that one, right? I joke around, but that's a lot of traders these days, right? On their iPhones, right? Bless their soul. That's all right. I need more money. They can give it to me. No big deal. If you're going to be a professional trader, guys, get off your cell phones, get on a desktop computer or a laptop and do it the right way. But the bottom line is, though, is that why on earth didn't we see those buyers step in and at least give it a shot, right? It's almost as if they just walked away. And again, knowing that megaphone is there, knowing that we had this big, strong channel, and the fact that we didn't get anything at all, right? They try once, they try twice, nothing. So that tells me right now, okay, let's look at the downside. Nice, easy channel on the way down. I would expect here, again, you know there's going to be some buyers that come in late. Remember, they're just waking up in Asia right now, and in Asia, they're going to look at this and go, oh, I think we should be a buyer here right now. So expect price to go a little bit higher, 53, 59, and then I would expect it to come down here to that 52.50, okay? Now, all of this gets blown out the water the minute we retest these highs. Okay, so let me be very, very upfront. I am looking for a sell, no guarantee here. Remember, we are still going counter the long-term trend. Short-term is definitely bearish, but long-term is significantly bullish right now on crude. So I'm looking for a sell at 53, 59. If we torch right through this, remember, I'm not blindly selling the 53, 59s. I'm going to look for the proper trigger. If you're a client of mine, you know exactly what I'm looking for. If we just torch right through this and we go back to that high again, you might as well just throw that sell button in the trash can and keep on buying tomorrow. Okay, it's probably a pretty bullish day tomorrow. So keep an eye on that high. It looks like the high of that range, what do we got here? 54.15. 54.15, that's my line in the sand. If we get back to 54.15 overnight, we are bullish, bullish, bullish. I don't think it's going to happen, but hey, you can't trust what you think. Don't think so much. I get a headache most of the time when I think too much. But that's my strategy here for crude. I'm expecting short-term selling back down to our targets below us. And again, I will be looking for a sell at 59s. If it torches right through it, all of a sudden I'm very, very close to being bullish. And I won't be a bull again until we get that 54.15 again. Or we come down and then go back up, right? You get the plan. Guys and gals, I want to thank you so much for being a part of the newsletter tonight. Don't forget, download those charts for tomorrow, grab your free pass, and register for your nightly newsletter mailing list. And if you happen to have some free time, don't forget to share this information with a friend. And don't forget, we have the best free trial on the planet. Don't take my word for it. Make me prove it to you. Register for our free trial and you'll see exactly what I'm talking about. We offer 3 levels of membership so everybody can get involved. And of course, I've got someone standing by 24/7, 365 to give you guys and gals a hand. My name is Joseph. Hope you guys had a great long weekend. Feels good to be back. Get the blood pumping once again here for a shortened week. But what do you think? Again tomorrow? Same time? Does that work for you? Same time, same place? Alrighty, you asked for it. My name is Joseph. We'll see you same time, same place tomorrow. Be well, be nice to each other, and we'll see you guys tomorrow, 8 a.m. Eastern Time, and of course, 8 p.m. Eastern Time for our newsletter. Adios, amigos. Bye-bye for now.